Welcome to True Finance, where your financial future begins with clarity and confidence.
Introduction to Cryptocurrency Investments. Welcome to True Finance's extensive guide, where we embark on an educational journey into the world of cryptocurrency investments. This comprehensive guide is tailored to provide a deep understanding of cryptocurrencies, their underlying technology, investment strategies, and the global regulatory environment. The emergence and evolution of cryptocurrency. Origins of cryptocurrency. The story of cryptocurrency begins with the creation of Bitcoin in 2009 by an unknown entity using the pseudonym Satoshi Nakamoto. Born in the aftermath of the 2008 financial crisis, Bitcoin was conceived as a decentralized, peer-to-peer electronic cash system, offering an alternative to traditional banking systems. This section delves into the motivations behind Bitcoin's creation, focusing on its pioneering use of blockchain technology to achieve decentralization and trustless transactions. Blockchain technology explained. Blockchain technology is the foundation upon which cryptocurrencies are built. A blockchain is a decentralized ledger recording transactions across multiple computers to ensure security and transparency. Each block in the chain contains a number of transactions, and once added, the data in any given block cannot be altered retroactively. This immutability feature is what makes blockchain a groundbreaking technology, not just in finance, but in other areas like supply chain management, where it can be used to track the production, shipment, and receipt of products transparently. Diversity in the cryptocurrency world. Following Bitcoin's success, a multitude of other cryptocurrencies emerged, each offering unique functionalities. Ethereum, for instance, expanded the use of blockchain for creating smart contracts and decentralized applications, opening avenues for more complex financial transactions. Ripple, XRP, aimed to streamline global money transfers, and Litecoin offered faster transaction processing times compared to Bitcoin. Cryptocurrency mining, beyond coin creation. Understanding mining. Cryptocurrency mining involves validating transactions and adding them to the blockchain. Miners use powerful computers to solve complex cryptographic puzzles, contributing to the network's security and functionality. This segment explains the proof-of-work mechanism employed in Bitcoin mining and introduces alternative methods like proof-of-stake, which aims to reduce the energy consumption associated with mining. Investing in cryptocurrencies. Beginning your investment journey. Investing in the world of cryptocurrencies begins with a foundational understanding of the purchasing process, storage methods, and security protocols. This is vital for anyone looking to navigate this dynamic market successfully. Selecting cryptocurrency exchanges. Cryptocurrency exchanges are online platforms where you can buy, sell, and trade digital currencies. When choosing an exchange, consider factors like security measures, transaction fees, ease of use, and the variety of available cryptocurrencies. Popular exchanges include Coinbase, Binance, and Kraken, each offering different features and levels of user-friendliness. It's also crucial to research an exchange's history, particularly regarding security breaches or regulatory issues. Digital wallets, hot and cold storage. Once you acquire cryptocurrencies, the next step is to store them securely. Digital wallets are used for this purpose and come in two main types: hot wallets and cold wallets. Hot wallets. These are digital wallets connected to the internet, making them convenient for quick transactions. However, they are more vulnerable to online security threats. Hot wallets are ideal for smaller amounts of cryptocurrency that you might want to trade or use regularly. Cold wallets. Cold wallets are offline storage options, offering enhanced security as they are less susceptible to hacking. These include hardware wallets like Ledger or Trezor, which store your cryptocurrency offline on a physical device, and paper wallets, which involve printing out your private keys and storing them in a secure location. Cold wallets are recommended for storing larger amounts of cryptocurrency over long periods. Security practices. Securing your cryptocurrency investment is crucial. Use strong, unique passwords for your exchange accounts and wallets, and enable two-factor authentication, 2FA, for an added layer of security. Be vigilant about phishing scams, where attackers pose as legitimate entities to steal your credentials. Always verify the authenticity of websites and communication, and never disclose your private keys or recovery phrases. If you like our video so far, don't forget to hit like and subscribe. Cryptocurrency market volatility. The cryptocurrency market is characterized by high volatility, with prices subject to rapid and significant fluctuations. Factors contributing to market volatility. Market sentiment. Cryptocurrency markets are heavily influenced by investor sentiment, which can be swayed by media coverage, influencer opinions, and broader investor attitudes. Positive news can lead to rapid price increases, while negative news can cause equally swift declines. Regulatory news. Announcements of new regulations, legal challenges, or government endorsements of cryptocurrencies can significantly impact market prices. For instance, a country announcing plans to ban or heavily regulate cryptocurrencies might cause a price drop. Technological developments. Innovations or updates in blockchain technology or issues like network hacks or failures can also affect prices. For example, a significant upgrade in a cryptocurrency's network might lead to increased investor confidence and a rise in price. Strategies for managing investment risks. Diversification. Spread your investments across different cryptocurrencies and asset classes to mitigate risk. Diversification can protect against market volatility specific to a single currency or the crypto market in general. Stay informed. Keeping up to date with market trends, news, and technological developments is vital. This knowledge can guide your investment decisions and help anticipate market movements. Risk tolerance assessment. Understand your personal risk tolerance. How much market fluctuation can you withstand, both financially and emotionally? This understanding should guide the size of your cryptocurrency investments. Use of stop-loss orders. Implement stop-loss orders to automatically sell your cryptocurrency at a predefined price, thus limiting potential losses in a volatile market. Long-term perspective. If you believe in the long-term potential of cryptocurrencies, a buy and hold strategy might suit you. This approach involves weathering short-term market fluctuations and focusing on long-term growth. Advanced cryptocurrency investment strategies. Decentralized finance, DeFi, a paradigm shift. DeFi is reshaping the financial services landscape by offering decentralized alternatives to traditional banking operations. We explore key DeFi concepts, such as lending protocols, decentralized exchanges, DEX, and yield farming, explaining how they work and their potential risks and rewards. Cryptocurrency trading strategies. Day trading, a strategy for short-term profit. Day trading involves conducting multiple trades within a single day to capitalize on short-term market movements. We explain the tools and techniques needed for effective day trading in crypto, including how to read charts, use technical indicators, and the importance of setting up stop-loss orders to manage risks. Swing trading, capitalizing on market momentum. Swing trading is a medium-term strategy where traders hold positions for several days or weeks to benefit from larger market trends. This section covers the analysis techniques used in swing trading and the patience and discipline required to execute this strategy successfully. Scalping, making quick, small trades. Scalping in cryptocurrency trading involves making numerous small trades to earn profits from minor price movements. We delve into the rapid and intensive nature of scalping, discussing liquidity considerations, transaction costs, and the need for real-time market analysis. Influence of regulations on investment decisions. Regulations play a crucial role in shaping investment strategies in the crypto space. This section emphasizes the importance of staying informed about regulatory changes and understanding their implications for compliant and strategic cryptocurrency investing. Risk management in cryptocurrency investing. Effective risk mitigation strategies. Managing risks is a critical aspect of cryptocurrency investing. Strategies for risk mitigation, including diversifying investments across various cryptocurrencies and asset classes, and understanding your risk tolerance. We hope you enjoyed today's video on cryptocurrency. It is a very popular subject with many technological and social concerns. You now have some tools to prepare you for this exciting new investment universe.
As we close today's journey through the landscape of financial wisdom, we extend our heartfelt thanks to you, our dedicated viewers, for joining us. Please like and subscribe so that we may continue to bring you the best financial education.